and we bring Sanjeev in on here. He has 35 years of accounting experience wise. And on top of that, he is a real estate investor. So he has a very good grasp of how to properly structure your portfolios wise to give you the, to help you maximize your tax situation. So Sanjeev, thank you so much for joining us again today on this webinar wise. Sanjeev does work for us with our portfolios wise. And really it's, if you're a hardworking individual, you've established yourself, you've started real estate investing, to get to that next level place, so that you're not leaving money on the table. How you grow your portfolio is, what you can do is you can start taking equity out of the property, refinancing the property, and then using that money to buy more properties. So it's like playing a game of Monopoly, and you're moving yourself around the Monopoly board. So what you want to do is you want to start decreasing your cash flow on the property wise by increasing the interest expense, and then using that money to buy an additional asset. And now you have two instead of one income producing assets. And the value of that is now you have a portfolio that you're growing of multiple assets that are going up in value. So instead of having one property in 30 years that's fully paid off, you actually have the ability to have multiple properties fully paid off in 30 years. And that's really the beauty of building a structured real estate portfolio wise. And how you can start accelerating this even further is, this is where you get into holding companies and having holding companies put the assets in those. And then, so for example, if you're a self-employed individual, you can leave money in your operating company and then move income over to your holding company, and then continue growing on there. So I think I'll start off with going on there. Sanjeev, what would you say is the difference between an operating company and a holding company?
The difference between the operating company and the holding company is that an operating company is an active business making money.
Correct.
Not through investments or real estate. That's the simplest way to see.
Exactly. So for example,
running a business,
Sanjeev's operating company is accounting. No problem.
Yeah,
you take that, I'll jump in. So an operating company, for example, for Sanjeev, is accounting. So he does accounting. That's where he makes his day-to-day money. For me and Kyle, transacting in real estate, that's where we make our money. What happens with the operating company and the holding company is, the operating company is where you make your day-to-day money. So this is a strategy for self-employed individuals, not T4 individuals. That's where you make your day-to-day money. And then what you do then is you pay yourself out a certain amount of money from the operating company wise, and then any excess income that you have, you move that from your operating company over to your holding company. There's no taxes for that lateral move across wise. There's different ways to move it over. You move that over, and your holding company is what actually has your assets. Now, you would have your real estate assets in your one holding company, and then you have investment assets. You'd want to put that in another holding company. Now, the key thing is, you never want to have these assets in your operating company. That's again only for your day-to-day operations. Your holding company is what you want to have your real estate assets in.
Alex?
And no, not completely. It's also due to mortgages. The bank will not give you a mortgage on a real estate holding in your operating company wise. So that's something that won't happen. So there's a risk mitigation in that aspect of it. So on the risk mitigation level, if someone sues you in your operating company wise and you have the asset in your operating company, then those would be liable and you'd lose everything. So there is that risk component, but that the bank also views that as risky. Why? So they want to see those assets in your holding companies as well. If you put in your operating company, you're not going to be able to get a mortgage on the property wise. So that's important. How are we looking at for questions, Kyle?
Can you move real estate that is privately owned, mortgaged, into a holding company after purchase has been completed?
Yes, you can own up real estate which is owned in your own personal name into a holding company under the provisions of Section 85 of the Income Tax Act. When you transfer the property from your personal side to the holding company, under Section 85, there are no capital gains, so no taxes payable. Yes, taxes will be payable by the corporation when you actually sell the property.
Guys, if you have any questions, put them in the Q&A. I'm impressed all 88 of you have stayed on this long, because that was me talking wise into the phone wise. I'm glad our internet is working again. So thanks for the patience wise. We can get back to rocking and rolling here. So if you have any questions, put them in the Q&A panel wise, and then we will get to the questions there. So what we were just talking about is we were talking about if you're moving current properties in your personal name, can you move them to a holding company? And the answer is yes. Sanjeev was just explaining that. There's a way to do that without incurring a capital gain. Now, in regards to if land transfer tax is applicable, there's two types of transfers. There's the paper transfer and the legal transfer. Why don't you just briefly touch on that, Sanjeev?
So when we say a paper transfer, essentially we don't transfer the title of the property to the corporation. We simply transfer the asset into the corporation only for the purpose of taxes, nothing else. All the reporting of the income, whatever, the sale and the profit on sales of the property, capital gains, will be reporting on the corporate side. No longer they'll be reported on the personal side. But sometimes it's advisable to do a legal transfer. And one thing I figured out with a couple of lawyers last week, they're conflicting thoughts, but what they said, if you want to transfer a property legally into a holding company, you can do that. The land transfer tax will not be payable on the value of the property. The land transfer tax will be payable on the amount of the mortgage outstanding. I'm not an authority on the land transfer tax, but that's the kind of a reply I got. Because I know many people asked me about this in the past, so I try to seek out an answer on this. But there have been many lawyers who have been able to transfer the properties into the holding company without paying land transfer tax. So that is one area which I don't know, I can't really answer. So yeah, I give you both the answers what I've seen in the past.
Yeah, and when we say land transfer tax, even though Sanjeev's an accountant wise, the land transfer tax is actually paid on the transaction of the property. So it is the lawyer end where that is. It's not actually on Sanjeev's end. So that's why we always say you're going to have to speak to the lawyer, the qualified lawyer, to plan that out wise. And now in regards to structuring your portfolio wise and moving properties over, in regards, that's where the long-term planning comes into play, and speaking with your accountant wise to see if it makes sense to switch some of your properties from personal name to holding companies, and how you're going to structure that operation wise.
So and it might be a good time now, Alex,
let's
to talk about when a holding company is beneficial, when you should consider opening it, how many companies you should keep in there. There's a lot of the questions that are being raised right now.
Yeah, so if you're a self-employed individual and you're buying investment real estate, 100% you should be opening up a holding company. There's really no question about that. So if you're a self-employed individual, or you own your own business, you'd want to be doing it in a holding company. If you're a T4 individual, Sanjeev, can you go into when you're a T4 individual, when you look at putting real estate in holding companies?
I can correlate the answer to this to one of the question.
Mhm.
The gentleman said that the tax rate on the holding company is higher. He's not wrong. The tax rate on the company is higher, but yes, it is still advantageous to have the property in the holding company from a tax perspective, specifically when your income is higher than $150,000. The reason for that is the tax is plus 50% on the rental income, the net rental income, I would say. But 2/3 of that portion sits into a refundable account, and is an escrow account. When you take out the money from the corporation to your personal side as a dividend, that tax money, that is a 2/3 amount of that tax money, is refunded back to the corporation. For example, let us say we had 100,000 income, we paid $50,000 taxes into the corporation, and we distributed that $100,000 as a dividend. $33,000 of the tax paid will come back to the corporation. So the effective rate of tax does go low. It generally what people do, they will keep on paying the taxes in the holding corporation as long as a property remains with a holding company. Once their income goes down below the threshold, maybe it goes down to a lower level, let's say maybe $10,000, $20,000, or maybe, they decide, I'm on the verge of retiring. Simply getting out the dividends from the holding company will give you a refund back into the corporation. So in a way, you get that money back. The only thing is that it is held back by CRA till the dividend is paid out. So saying simply one thing, the tax rate is higher in isolation and ignoring the fact that there's a refundable dividend tax. People can Google it, RDTOH. It is called as RDTOH. Once they Google RDTOH, they will understand exactly what I'm saying. It is a refundable dividend tax on hand. It sits with CRA. It is not a real tax. They're just holding it back. They want you to distribute this money on your personal side. The longer you hold it, it all depends upon your income, but that money will come back to you eventually. But on the personal side, once you pay the taxes, they're gone forever. So now coming back to Kyle, can you tell me which question you want to start me with?
Let's just start from the top, Sanjeev.
I think the first question there was, this relates to Alex. Alex, I'll let you do that.
Okay, I have 3 investment condos so far, but they're all basically break even. Rent covers mortgage expense and property tax. Other than possibly limiting liability, is there any advantage of putting in a holding company given the $1,500 plus cost per year of holding co? And to switch those over, no, I would say not at this time, because you already have them in your personal name. But potentially, if you're buying, depends on what your employment status is, to move them to buy future properties in your holding company, then that may make sense. Which is fine if you bought the first 3 in your own personal name. Maybe future ones you may want to buy in a holding company. So it just really depends on what your situation is and everything like that. Let's go to the next.
Why do you recommend that you limit the number of properties in a holding company to 4 generally?
The reason I recommend to limit the number of properties into the holding company is just from a risk perspective. Otherwise, there is no bar by CRA. You can have 10s, 20s, 30s in one company. There's no bar. It is just in my mindset. If something goes wrong with one corporation, I should be protected. That's the only reason. It's a risk.
Yeah, no free.
Like we have a risk on the personal side, there is potentially a risk on the corporate side as well.
Yep.
Somebody files a lawsuit against the corporation. You have 4 properties. There is a risk. If on the personal you have 10, you are totally exposed. But at least by having multiple corporations, you are protected to some degree.
Yeah, you're protecting yourself against getting wiped out is ultimately what it is. So it's a level of protection, a level of not insurance, but it's an insurance like protection for you to make sure that if something were to happen, because things happen. You know, in 9 weeks ago, we didn't think we'd be doing these webinars. Hey, Sanjeev, 9 weeks ago, we're past the tax deadline. Did you ever think in your the tax deadline?
Yeah. No, you're not. I would say that people are still coming in.
So
question Nita asks, is it tax efficient to have a company for just one rental property? And Sanjeev, that's not really the determining factor. It's more based on your personal income, correct? With advantages starting around 100,000 and growing to the maximum benefits of rent.
Personal income and other factors, and what do they want to plan? Absolutely right.
And one question we've had in past seminars wise when we talked about holding companies is that you can leverage your principal residence with a home equity line of credit and still have the property in a holding company and write off the interest on the home equity line of credit. So there's different. It's all about structuring it and making sure you're maximizing your eligible write-offs on these properties wise. So there's many different structures to way. So to continue on with that question wise, just having one, yeah, you can start off with one, but it just depends on what you plan to do and what you plan to grow your portfolio on. Because there are ongoing maintenance costs and with a holding company that need to be spent wise. But if you plan
maybe
on
we should
growing
talk
it,
about that, Alex, the cost associated with it. Because I think Sanjeev before had said to set it up is around $1,100 to get it properly set up. And then the financial cost fees are about $1,500 to
$2,000. Around $1,100. Yeah.
Yeah, that's about right. Now we'll go to the next question. What is the typical process to transfer from personal to holding company, leaving title in personal? Oh, that's the paper.
Go to an accountant. Go to an accountant. He will do it for you.
Yeah.
Simple.
Oh, there we go. I like this one. How do I get a mortgage so I'm not showing enough T4 income? There's enough equity in the properties that I own.
Sir, hard to answer this question. Sorry about that. There's nothing anybody can do.
Now, this is something I do advise people wise is that, you know, to play this game, to play the real estate game, and mortgages are required. So you do need to show some income. So if you're an individual that's not showing any income for and keeping money in your all your money in your corporation, you do have to show some income on the personal side in order to start qualifying for mortgages wise. That's not a bad thing. It just allows you to fully participate in the game of real estate wise, and then using leverage. Leverage is your friend in this case, and will allow you to expand your portfolio wise. And again, this is where you go to an accountant like Sanjeev in regards to, you can structure it and make sure that you're showing some income wise, allowing you to maximize how much then you can play the game and get leverage on the properties wise, and then also minimize the income you're showing for tax wise. So it comes down to structure. Would you agree to that, Sanjeev, in regards to you do have to show some income?
Yeah. If you have to have income, listen, there has to be a balance. Mm-hmm. You can't keep everything in the corporation. So at least good enough to justify. Mm-hmm. Mm-hmm. You cannot entirely be doing the tax savings. There has to be a balance between tax savings.
Broker, though, because they can shop around to different financial institutions. Each of them have their own qualification criteria, and they'll be able to fit you with the best institution, you know, that'll meet your needs.
Well, this is actually a case. I know exactly where I'm assuming this is where this person's coming from. and I'm sure Sanjeev gets this all the time. He'll have a self-employed individual coming in. Sanjeev, I don't want to pay any tax. I want my personal income to be zero. That's what I want.
Free lunch.
And in that case, it's going to be much difficult. It's going to be difficult to get the mortgages wise. So there is a balance that you want to play, and Sanjeev will tell him, okay, we can do that, but you're also exposing yourself to the CRA and potential liabilities if the CRA comes by and going, okay, well, what's all this? You're showing zero income, but you have this mansion. What's going on here? Something's not equating. So that's where the balance is very important. And playing within the rules is what you want to do. Okay, let's go to the next question here.
You know what? I like to add something here. I got a funny situation just yesterday. One of my clients had about $1.6 million in net income, and he wanted to lower it. There was a way to lower it. It's not that there was not a way, but I said no. Then I said, okay, if you show this income and pay the taxes, you'll be able to buy real estate worth $6 million.
Mm-hmm.
And that $6 million real estate, even if it appreciates at 5% per annum, that's about $300,000 a year. But you're just paying $177,000 in taxes. And you are a gainer for the rest of your life of $300,000. And you paid only once.
Mm-hmm.
So why don't you pay taxes?
Mm-hmm.
And do you know what he said? Can I pay more?
Yeah, exactly. So it's all about how you structure.
There you go.
So
pay your taxes, pay a fair bit of it.
Yeah, pay your taxes, and again, it allows you to fully participate in the game of making investments and using leverage. Because leverage, in Sanjeev's example, 1.6 million then gets you, let's say, $6 million worth of chips if we're making a casino reference wise. But if you don't pay your taxes, the casino isn't going to give you any chips. So that's the key thing. This is a good one. I tried to take out equity. I tried to take out my equity on my 3 rental income condos, one of which is fully paid in full. However, banks turn me down as they will not include rental income as income. The banks do include rental income as income wise. They all have different criteria how they classify it. But again, if you're showing zero income on the personal side, then there may be some issues. But if you own one fully in cash wise, this goes back to Kyle's comment that he made about 5 minutes ago. If you go to a mortgage broker and go around, there should be an institution that's going to lend to you. Now, big red flags where you won't be able to lend goes back to if you haven't paid your taxes and you don't have your tax returns done, it becomes very difficult for you to do to get leverage and financing wise. Because if you get audited by the CRA, the banks aren't going to be lending you money. So they need to see that your taxes are complete in order to lend you money. So that's the important thing. Next question. If I pay all the money I owe for my mortgage for my condo, which is for investment purposes and is rented out, is it worth it or not? Q2, I've applied for HST to be returned for my condo for the past 2 months. Bought for renting on 10 York, but I have not received any information to the state. Okay, that looks like it's 2 different questions wise. I'll do the HST. You're talking about the HST rebate wise. The HST rebate, I can say, but that's 10 York. 10 York's been closed for a while. Anyways, I'm just gonna address the HST rebate question quickly wise. I do know the HST rebate section of the CRA during this time has been slow or closed. It takes some time for the HST rebate to come through. In typical times, I know, Sanjeev, you get it done fairly quickly. How quick does the HST rebate get processed and money into a client's account typically for you?
Usually it does take anywhere from 6 to 8 weeks. But
Yeah.
Right now, since all the rebates are paper filed, there is nobody in the offices. So it is not even being processed.
Yeah.
You will have to wait.
Yeah.
And I was talking to somebody who works with CRA. They have started calling some skeleton staff into their offices from the following week.
Mm-hmm.
We don't know how much time it's getting. I would idly say you're looking at another 4 to 6 weeks at least.
Yeah, so you will eventually, if you did all the paperwork correctly wise, you will get your HST rebate back. This is for anyone that's on this call wise. But that I know specifically that department in CRA, and as Sanjeev just confirmed as well, has been shut down. So if you haven't heard anything, it's because there's no one there. Now, if we go back to the first part, if I pay all the money I owe for my mortgage for my condo, which is for investment purposes and is rented out, is it worth it or not? No, you don't want to do that. You don't want to have a property that's owned all cash wise. You want to take leverage and use that leverage to invest in other assets, whether it's more real estate or some other asset wise. So it's not worth owning a property all cash for investment purposes wise. If you do the rate of return, it's actually very poor if you own it all cash wise. So you don't want to do that. The only time I would say you'd want to do that is if you're in your 70s and you want to live off cash flow. At that point, you don't want to do anything. So you want to maximize your cash flow. That would be the only time that you're doing that. So next question, is there a personal income level at which point it would be advisable to move real estate holdings to a holding company? Generally 150,000, right, Sanjeev? Again, there's so many different situations.
Around 150. You have to analyze the situation.
Yeah.
It is a very subjective answer.
Mm-hmm.
And I have been responding to these answers on emails to various people who have been sending their emails.
Mm-hmm.
It's the most difficult answer to give it as it is. Mm-hmm. The tax returns have to be looked into before a fair answer can be given. But at least 125, 150, yes. But it could be a situation even below 100, it's advisable.
Yeah.
It's a subjective answer.
And again, going into the next question, kind of similar wise, it just depends on everyone's situation. But I would say this, if you're a salaried individual and you've owned them in your personal names already, it's not worth for you to switch over. But you may want to open a holding company for future investment assets. And you can still refinance condos in your personal name and then use that money that you refinance and move that money to the holding company side. And remember, if you're moving money from your personal name to your holding company name, at some point in that's a liability in your holding company. The holding company owes you that money back. So when you, let's say, make money in your holding company wise, you can then transfer that money back to yourself and there's no tax consequence on that because the holding company owes you that money. So again, that's how you structure different things and they're advantageous. So switching things that you currently own in your personal name to a holding company name needs a one-on-one conversation with your accountant wise to make sure that that makes sense. Future assets going into a holding company will most likely make sense. Still takes a conversation with a professional wise. It depends on what your goals are. But it's a much easier question to answer versus what's been done in the past.
Right, and Alex, Yusuf asked,
do you think in the following months? Yeah.
Do you think in the following months and years we'll
you want to read it?
Buy real estate?
It's always a good time to buy real estate. And I know that sounds like a ridiculous answer, but when Sanjeev's laughing too, but what it is we never look at real estate in the short term. We always look at the long term wise. All my projections are 5, 10, 15, 20, 30 years. Those are my projections wise. And I really get excited about what my portfolio is going to look like in 30 years. So it's always a good time to buy real estate. So the answer is, yeah, in the following months and years, it'll still be a good time to buy. In the right locations, I guess I should put that asterisk wise, in the right locations, it's always a good time to buy. And Toronto is always going to be a good location. And anything that's going on right now is only temporary wise. You want to ask the next question, Kyle?
Yeah, Sanjeev, Vicky asks, she has an operating company, but they only have rental income of about $42,000 a year. Does she need to register a GST account?
If it is a commercial property, Yes. If it's a residential property, no.
Yeah, there's I'd say there's some missing information in that question wise. If it's residential, if it's residential
Go ahead.
income, there's no HST. Is there a capital gain exemption once you?
Is there a capital gains exemption once you close or transfer the holding company? The answer is no. Capital gain exemption is only for the small business incorporations, and a holding company is not a small business incorporation.
But you still get the 50%. The capital gain is still only 50%.
Absolutely.
Yeah. Just to clarify, other people.
Absolutely.
So what that question's relating is the 800,000 personal exemption for capital gain, correct? Is that's what you're answering, right, Sanjeev?
That's what I see.
Yeah, that's what you see. So just for people that don't even know what we're talking about here, let's say so I have an operating company wise, and Sanjeev, correct me if I'm wrong on my example. I have an operating company. I sell my operating company, and I get a 800,000. I've made $800,000 profit on the sale. I have a one-time personal gains exemption on that sale of the operating company where I won't have to pay tax on that. Is that the correct answer?
Yeah.
Okay. So in that case, but in regards to when you sell real estate, it's taxed at 50%. That's the capital gain rate versus having to take the 100% of the profit in. Okay, next question.
Alex, I'd like to add something here.
Of course.
It's a beautiful question. But if people have an operating corporation where they have reserves more than $800,000, they can still do a capital freeze and take out the money tax-free out of the operating corporation. There is a way to do it. Just go and see your account.
Yes. It's a very complicated conversation.
Sanjeev, who's the
No, but they can buy that money to buy real estate.
Hey, you want to go on to the next question?
Oh yeah, Sanjeev, who's the best person to set up a holding company? Is it an accountant, a lawyer?
Both are equally good. I won't say anybody's less competent. Both are equally good, but accountant is relatively better if he works along with the lawyer. The reason is there is an accounting and a tax implication, which has to be kept in mind before doing anything else.
Yeah, you truly need both. So the actual person that does the holding company is actually the lawyer. The person that's going to properly structure ownership is the accountant. If that makes sense. Do you want to go to this raw will question?
Yep. So as you get closer to retirement, your rental income starts eclipsing expenses, likely because you've paid down your mortgage over that time. So it makes sense to move properties to the holdco to minimize tax. Does this mean when you sell while in the holding company, capital gains taxed at a lower rate, but you can transfer the proceeds to your personal side via dividend and then get a refund for the dividend tax back in the holding company?
Now, this is a very complicated and a loaded question. It cannot be answered till you have all the numbers in front of you. It could be good in one situation and it could be very bad in the other situation. So I would say sit down with their accountant. Yes, the gentleman Rahul has understood the basics very well. I'm not going to deny it, but yes, the numbers will make a difference.
So what it ultimately comes to is, and we've talked about this before, the tax man cometh. One day you will have to pay the tax. And this is why you always need to sit down with your accountant wise. You got to determine when you want to pay the tax. You can never not pay the tax. So it depends on what your goals are for your properties wise to make sure that you structure it in the right way that you're paying the tax when is most advantageous for you to pay the tax. So that's why a lot of these questions will generally, they're like, yeah, you can do that, but does it make sense to you? That's where everyone is going to have their individual needs, and a consultation is needed.
Alex, you use the word, you have to pay tax at some point of time.
Yep.
Let me add a rider here. If somebody's planning your estate well, your estate might end up with paying no taxes even. You have to plan very well. That's a big conversation that I'm just adding. There can be a situation where you don't have to pay cash out of your own pocket. Sierra will still get its money. They're not going to leave that money. They're your silent partner. They will take their taxes, and we should pay that. But you won't pay it, somebody else will pay it.
People are probably mind blown right now. This is where different tax strategies come into place wise, and it's sitting down with, again, your accountant wise and figuring out these different strategies and what your goals are, and what you want to, if we're talking about estate planning wise, if you want to leave for your family or various things. Let's just go to the next question. We have 5 minutes left, so let's go through these. I closed a condo, paid up with funds as I could not get financing. Now it is rented out for 2 years. Would you advise take a mortgage? And would I qualify the mortgage with positive cash flow, but not enough on my T4? You should still be able to qualify for a mortgage wise, just at a lower loan to value ratio wise. So again, I don't know what your situation is, but there are people out there that you can talk to. Send us an email wise, and we can introduce you to some of our financing partners that can find a way for the money to come out. So it just depends on what your situation is, but you should be able, you should be able to take some money out of the property wise.
Alex, Maria had an interesting question. She owns a condo personally that they intend to sell. Is there any way for them to structure it beneficially from a tax perspective?
Not that I know of, no. Sanjeev, you want to add anything?
Kyle, I can't see the question. What time is that?
It was at the very bottom, but if they're selling a condo personally, is there anything that they can do? There's not really, right? It's just subject
No, nothing.
gains tax.
Yeah, you have to pay your taxes, sir.
Yeah. And Sanjeev, do you pay HST or land transfer tax if you move your property from your personal holdings into a holding company?
If you transfer a residential property, there is no HST. That's one thing. If you transfer a commercial property, there is a HST election form which has to be filed. Then again, there is no HST. On the land transfer tax, we already answered a few times. You have to see your lawyer. There are conflicting opinions from every lawyer, and I cannot speak for them.
Great, fair enough. Sanjeev, if you own a property with your wife, are you able to claim 100% ownership or all of the income on your tax return for just one of the spouses?
No. If she's the 50% legal owner, it has to go 50-50. If somebody's 100% owner, that has to go 100%. The legal owners have to put on their taxes the amount of rent they receive in the share they have.
Okay, so some real estate related questions here. Okay. Based on your projections, what would the right locations be to invest in? Always get this question. It just it depends on the opportunity wise. So I always look at what the opportunities are to see if it's a good opportunity for investment wise. I've sold condos in Oakville. I've sold condos in downtown Toronto. I've even invested in condos in Calgary wise. And Sanjeev and I have very differing opinions on that. But it just really depends on the opportunity and if the location makes sense. So it's more of a detailed answer wise. You can't go wrong with downtown Toronto. But downtown Toronto is going to be expensive, and it's going to be more difficult on the cash flow side wise. So just depending on what your objectives are, and everything like that. So, but you can't go wrong in downtown Toronto, and you can't go wrong in certain locations in the GTA. Which then flows in well to the next question. With the over inventory in downtown Toronto, is rental being affected? Well, actually, there is no oversupply in downtown Toronto. What it is the borders are closed. So there's no immigration right now, and there's no international students coming in, and that's 200,000 people. If you had that 200,000 people coming in during a regular season, you would see continual rental growth in the downtown market. We're not going to have it this year, so rental prices are being impacted this year, but there isn't an oversupply. There just isn't the typical demand coming into the city this year. That'll change next year when borders are open back up in 2021. Selling a condo, I read one can minimize the capital gain tax by spreading the gains over several years. Yes, you can, but how you spread that gain over several years is that you would have to do a vendor take back mortgage on that, and then you can spread that over. I don't think there's another way to do that, right, Sanjeev? Just a simple answer. There's
no other way. You're right.
Yeah. So just the only way it would be is if the person that bought it was, and they paid you in over
5 years
for the condo wise, and you've taken the mortgage on it. That's the only way that you could spread that out, which I've had people done on commercial properties wise, and they're like, I don't need all the money right now, I'll give you a vendor take back mortgage. Much more common on the commercial side, not very common on the residential side. Okay, so I'll do this right here. Can the Section 85 rollover election apply properties owned in the US, or does it apply for Canada properties only? I don't even know what that is. You know what that is?
But there are two parts of the answer. There's two parts of the answer. He owns the property in the US. First of all, the US doesn't allow Section 85.
There we go. We're going to have to let Sanjeev go now. Sanjeev, thank you so much for taking the time. You know,
thank you very much, Alex.
Yeah, we got the hard.
I'll be glad to answer any questions. Send me emails.
Yep.
I'm typically answering 2 to 3 emails depending on the time I have, or answering 1 or 2 calls a day. That's the max I'm doing. But once the tax season finishes, I will make myself more available to everybody. Don't worry about that.
Yeah.
But I will be around.
And again, thank you, Sanjeev, so much for taking this time. Again, everyone on the call, Sanjeev, you know, this is tax season. There's a week left, and he's taking time to speak with us. So that's absolutely incredible. We really appreciate that. Kyle and I'll stay on, and we'll try to answer these last questions if we're not able to.
Goodbye, guys. I leave now.
Yeah. Okay. Bye,
Sanjeev.
Take care. Bye.
We are 3 in a family, mother and 2 adult kids who own 8 condos on individuals' names. Can we put them in one holding company? Yeah, you can, and you can all can have ownership of the holding company. It just depends on how you're going to structure the moving of the names over. Is a cottage a good investment? I don't personally think so. It's a recreational property wise, but I know people have done well on cottages wise. It's just not something I focus on because I like to be close to my assets. They're concrete boxes in the sky. There's very minimal things that can go wrong. So that's basically just my personal thoughts on those. Is there a legal document that specifies the ownership percentage between my wife and I? That would be if you did some sort of separate agreement with your lawyer on that. Otherwise, it's 50-50. Can you convert an existing incorporated business from an ordinary company to a holding company? If so, how? I'm going to go yes, as long as you're not doing any operations within that company wise. Your accountant will be better able to help you with that. What is the next trending area? We bought in downtown Toronto 6 years ago at a good price, not almost unaffordable to buy now. Areas that we like, if we're looking at the GTA, both Kyle and I have invested in DuPont and Dufferin in the Galleria development. We like Oakville wise. We think it offers a great price per square foot, and you get parking with the units. And then Calgary. I think Calgary offers a tremendous opportunity wise. You can get in there for such an incredible price point wise. We buy pre-construction, so I wouldn't want to own a physical asset in Calgary right now, but I'm very bullish on the upside in Calgary. And your worst case scenario is it doesn't go up in value. It's not going to go down any lower. So if you're interested in my our analysis on Calgary wise, please send us an email and we can give you more detail on that, in the different products we have structured there. Would you advise to always have a mortgage then have it fully paid up? Mostly yes, always. If you're living in the property, then no, you don't want to have a mortgage that's debt. But if you have an investment asset, you having a mortgage is a good thing, because that money can then be used in other places to increase your rate of return on your investment wise. So if I own a condo and let's say it's $500,000, so I have $500,000 worth of cash in there, and I'm getting $2,000 a month in rent, but I also pay property tax and maintenance fee on that. So let's say my net rent at that point is $1,500. I'm getting $1,500 a month on a $500,000 investment. It's not a great rate of return. But if I leverage that, then I get a much better rate of return, and I get the appreciation as well. And then I could have 3 properties going up in value versus 1 property. So leverage is good. I wouldn't want my investment asset paid off unless I'm looking to live off the cash flow, and that's a different situation.
Yeah, otherwise the mortgage interest as well is an expense that is totally written off in your taxes as well.
Yeah. Do you want to handle? Oh wait, I think I went down. Oh yeah, we got that one. Okay. Do you want to go talk about the rental market, Kyle? Alex, you mentioned the rental market is affected this year due to the border closure, but it'll be temporary. The anonymous attendee, 1201.
Well, yeah, exactly. And we have some good videos coming out about this as well. The rental market has definitely been affected. It's been quite a soft market right now because of the lack of immigration, because of the lack of international students, and the Airbnb market as well. Those hosts are no longer able to rent out their units via Airbnb short-term rentals. So the vast majority of those have converted over into long-term rentals. And you'll see a ton of furnished rentals in the rental market right now. So there's definitely a lot of supply on the market. So renting out your unit is challenging for the time being. Alex, what do you think? Is it going to improve?
In a year, not this year.
Yeah, it's going to take some time. The market, we definitely believe, is going to absorb all of that supply. Things are going to return more to normal. And once the borders, students come back, everything should return back to normal. But obviously, we can't predict what's going to happen with COVID, and that's the major determining factor right now. But it definitely will improve. The long-term fundamentals for Canada, and especially Toronto in general, are still there. We're still going to need immigrants to maintain our economy. Toronto is the economic engine of Canada. We have tons of high-tech, well-paying jobs. Plus, we're well-diversified. We have mining, healthcare, banking. Everything is going for Toronto still, even in this challenging rental market right now.
Quick answer here. Yes, Sanjeev's info will be going out to everyone. Do you think Mississauga downtown is a good location for investment? Unfortunately, I do not. I do not like downtown Mississauga. I do not like the lack of transit in that area. So I always look at how do I get to the mothership, and what I define the mothership as is downtown Toronto wise. And I can't easily get from the Square One area to downtown Toronto. Now, with the rapid transit being built across here, Ontario, and when that's complete, then there's an argument to be made that, okay, I have a rapid transit connection with the GO train, then I'd be willing to discuss downtown Mississauga, but not until that rapid transit is complete. If I already have a large yearly income from personal investments, stocks, bonds, or of $280K, should I pay myself a salary T4 in order to obtain the mortgage for investment properties? I would speak with Sanjeev on that. I'm inclined to say yes, but he's the one that best structures the tax planning on that, Alfred Wise. So I don't want to say go do that, but I'm inclined to say yes, but he would have to have a better understanding of how to structure that all up for you. If we purchase properties in Calgary, how do we manage them? So the investment properties that we've sold in Calgary wise, they come with rental guarantees and they're fully managed. So the properties we've sold out there, including I've sold to my family and I've invested in, management is already handled out there and is included in the package in the investment properties that I bought. So I don't need to worry about management because it's by buying the property, it is already managed for me. The builder, these are specifically Minto projects. They've arranged for all that for me. So if you want more information on that, Julie, we do have some new stuff launching in the fall. Send us an email. We'd be happy to talk to you. FYI, outside of Toronto real estate, very good. Windsor up over 11% over the last 3 years and 12% this year. Kingsville and House is very affordable. Of course. We're both originally from Sudbury. The one thing about when we get into the outer areas wise, and if we talk specifically about Windsor, and I can say it because Windsor is similar to Sudbury wise, it can be a boom and bust city based on, Windsor's manufacturing in the automobile market, and Sudbury is mining wise. The economies can definitely go down like that as well. Whereas we know we have sustained growth in Toronto wise, as well as all my investment. That's not true. The investments I focus on are condos because they're concrete boxes in the sky. There's very little management that goes into them. I own a triplex. I own an apartment building. Those require much more management. That's why I like condos and I consider GTA blue chip. But yes, definitely you can make good returns in other locations outside of Toronto wise. It can just come up with different headaches that I don't have in Toronto.
And for us as well, we're in Toronto. It's very easy for us to manage them if we need to, versus Windsor, it can be much more challenging because you can't be on the ground there.
Why is investment in Oakville good? Oakville, it is voted the #1 place for new Canadians to live. It was voted the top city in Canada to live. Oakville has a brand name to it. And I can get a unit there. Now we're looking at the low 800s per square foot with parking wise, versus if I were to go downtown Mississauga, it's much, much more expensive. And then obviously downtown Toronto is much, much more expensive. So just the affordability aspect is quite incredible, especially when I compare it to other areas, which I think aren't as good as Oakville wise. Oakville surprisingly offers affordability.
Yeah, they've got the GO train, post-secondary education. There's a lot going for Oakville that most people don't consider.
Yeah, and even when you look at the condos that are going along Dundas wise, if I look at the pricing divide between, if I look at the freehold properties, which are north of $1 million wise, and the price of condos, which are sub 500, in some cases sub 400, there's quite a divide between the pricing of the two. Become the affordable options. What about Vaughan for investment? I want to see more. I want to see more results there. I'd rather Oakville over Vaughan, just out of affordability wise. I'd rather Yonge and Finch versus Vaughan because I'm on the Yonge subway line. So I need to see more.
Yeah, and looked into it recently for another investor, and the price point was almost the same to better locations in Toronto that you can get. It was only a very small price discount, so it wasn't worth paying that premium because you could get a better location, a better product elsewhere.
Yeah, Kyle would know more about Vaughan than me. There we go, because I do know you looked into it. So if you want to reach out to him directly, he can answer that. How do you feel about the new ways of working? All the people that work downtown potentially not returning, continue to work at home. Love that. Love that. Hey, they don't have kids. I have a 2-year-old and a 9-month-old. I'm working in my basement. I would love to be working somewhere else right now. And if you were on the call at the beginning wise, and I thought this is a great example why, yes, working from home, but you still need an office wise. Well, I have no idea why the internet wasn't working properly. I have the most expensive fiber optic plan that Bell has to offer. My house is fully networked, and my internet's choppy. Kyle's internet's choppy, and I know he just got brand new internet installed. It was something that was happening in the area wise, and it almost threw off the entire thing. Luckily, somehow it rectified itself. So there are definitely still challenges like that that can happen wise. So to answer the question, actually, I think Kyle's a great example of answering the question because his wife works from home. Kyle, this has been beneficial to your wife because she's always wanted to work home for more, but I'm sure there's things she's like, I really need to be in the office for certain meetings, right?
Well, yeah, that's exactly it. Where she actually used to travel internationally quite a bit because they would bring their teams together. They found that them going to a meeting room for a week, they were able to accelerate their projects by a significant amount. They could get months of work done in person versus, months taking over the phone. So it's just a much more effective, efficient way to perform work. So the work environment will change, but offices are not going away anytime soon. And many people still want a walkable, livable neighborhood. And with that, you do need density often, and that's normally found in dense pockets in Toronto and throughout the GTA.
Yep. Yep. And it comes with the infrastructure as well. So if we go back to talking about internet infrastructure and everything like that, if I were to go visit my mother who lives in Northern Ontario, she does not have hardwire internet service at her property wise. It doesn't exist. It hasn't been wired for it. She has to use satellite internet wise. So there are going to be areas that just don't have the proper infrastructure as well, to accommodate the whole working from home aspect wise. Walkability is important and various things like that. And Toronto offers a lot of walkability. So there are going to be changes, but I'm not worried about the death of the office market. It makes me laugh. Again, they don't have kids. Calgary condo market good, even though oil market is down. Yeah, Calgary market. Okay, is Calgary condo market good right now? No, it's not. But will it be good in the future? I'm betting it will be because we know oil will go up. So we're talking about pre-construction options. We're not talking about something that's ready right now. We're talking about buying something when it's downwise and seeing it go up in the future. So the things that I invested in and we have sold, these projects aren't done till 2023 and they have rental guarantees on them till 2025. So I'm making a bet that in 2025, that things are going to be much better in Calgary wise. And Calgary has also diversified their economy beyond oil and gas. So there's many other industries that are specific in Calgary. I don't like Edmonton, but I like Calgary. What's your view on resale and pre-con markets? How are they affected by COVID at the moment and in the next couple of years? Pre-construction markets, no impact. Prices aren't going down. Prices will continue to go up. I've been on calls with builders for the last 9 weeks. If the builder isn't going to get the price they need to build the project wise, they're just not going to launch the project because they're not going to lose money building the buildings wise. And why prices are going up, it's just their cost of labor and their construction is continuing to go up. So these are aspects of why the prices of these projects keep on going up. So you're not going to see a decrease in the price. And if you don't get the price, if the builder doesn't get the price, it makes it economically feasible for them to build the project. They're just not going to sell the project. So that's what's happening on that side. On the resale market wise, yeah, we do anticipate there could be some softness in prices moving into the fall market. The reason being is that we are seeing the rental market, which is not great right now. We're seeing a lot of softness on the rental market. With borders closed and with the international student population not coming in, landlords will have to make a decision. They'll have to do what they need to do to get their units rented out, or they're going to have to, okay, I'm tired of my unit being empty. I'm going to put it on the market for sale wise, which then could lead to an increase in the inventory of the condos for sale downtown, which could then lead to some softness in pricing wise. But again, as soon as borders open back up and things go back to normal, and what I mean normal, I mean even the new normal. But immigration isn't going to change and international students aren't going to change. So once that turns back on, then we'll be in the exact same situation we were pre-COVID-19. I own a townhouse in downtown Toronto for 5 years now. Is it available to hold it or sell it? what is the future for rentals downtown? It's going to be soft this year. No doubt about it wise. So I would say, Edith, reach out to Kyle, because we are advising some people. It just depends. It depends on what you want to do with your asset wise. And it depends on the age of the townhouse and everything like that. We do have some people that are selling. So it's more if you want to sell, you want to sell now. But if you want to hold, then hold it through this whole process wise. So it's more you want to get it on the market now versus deciding in October that you want to sell it when we expect things to be softer wise.
Yeah, we're recommending if it is tenanted right now, just to leave it, let it be.
Yeah.
Don't worry about it. But there are some very specific criteria that if you do meet them, then you may want to consider selling now. So yeah, reach out to me and we can review those and see if that matches for you.
Oh, I like this one. I noticed you like condos even with service fees too high. Why? I don't know what a service fee is. It's a maintenance fee. And why I poke fun of that is I also own a house and I know all the costs associated with owning my house wise. So all a maintenance fee is an amortization of the costs to run your condo unit, which is the part of that is the reserve fund for the savings wise to do repairs on the building over a 30-year period. So a townhouse where you say has no service fees, don't you think it's good? No, townhouse does have costs to maintain the property wise. They are just in lump sum payments wise when you have to do the furnace, when you have to redo your shingles, when your windows go, when there's a flood in the property. Any specific action that needs to be done in the property, there's going to be a cost associated with that wise. Also, with townhomes wise, I'm typically now renting to families wise, which lead to a lot more wear and tear on the properties than condos wise. On top of that, typically where we're investing in condos are in high density areas. So the townhomes in those areas are incredibly unaffordable. Millions, over $1 million. So now if we're getting into townhomes, we're most likely looking into more suburban areas. And again, I do find the quality of the tenant can go down at that point wise once I get out of those high density areas. So there's a lot of different factors that flow into that. Aurora and Newmarket, Burlington for condo investments. If any, I'd be okay with Burlington because of the east-west and the GO train wise. I can give a longer answer on that. I'm not so hot on north of the city. Do you run the risk of exposure when you get leverage from your existing unit to buy a new property? Where do you draw the line? Well, I have 14. So
It really depends on your comfort level and your individual finances. So it's really a personalized decision.
Yeah, and you can't base what I do. I would never tell people to do what I have because I'm like a Bay Street trader, day trader wise. I have a lot of flexibility in what I do. Really, to Kyle's answer, it's what you feel comfortable with and looking at the portfolio and seeing how you grow it wise. So it just depends on your own personal situation. How do you feel about the Hamilton area? Yeah, like the Hamilton area. I've invested in Hamilton. That's where my apartment building is. And I have one investment condo in Hamilton wise. I do like Hamilton. And then last question, then we're going to wrap it up. To invest in properties, we need to leverage and take on debt. For retirees, we would like to clear all our debts rather than take on new debt. So what's your advice for retirees? So great question wise. So a retiree, if you're looking at living off cash flow wise, then it'd be more advisable for you to own your properties on cash because you're looking at bringing in, let's say, a sustainable cash flow to live on versus what we look at for appreciation wise. So maybe in that case, taking on leverage isn't the right course of action for you. So that would be a longer term conversation to have with Kyle and myself. So amazing, guys. Thank you so much for attending. We really appreciate it. There'll be a recording of this as well, and we'll do our best to edit out the beginning troubles on the video wise. And we'll also be sending out kind of our cheat sheet from our past seminars where you get answers to a lot of different questions that we had that Kyle summarized. So thank you for doing that, Kyle. Okay. Hey, guys. I'll see you so much.
Thanks, everyone.
See you guys later. Bye-bye.